All right, so I'm recording this now. Unfortunately, we just missed that early, introduction, but I think that's fine. But in this webinar today, and there'll be 4 webinars over the next 4 weeks, and we'll cover like sort of different topics. We are entering the fall, which is generally a good time for the markets, but this year, the summer, summer is when the markets go down a little bit, but this year has been different. Markets I might have taken a slight dip, but other than that, it's actually very close to all-time highs. Broke the previous all-time highs, which was there for about, I don't know, almost a year, I think. And so, what I wanted to do in this webinar is, if I may show this, the first slide again, is the challenges with options trading. And so many people are beginners, many people are intermediate, and what you want to do is be aware of this, and all of these points that we're going to cover, you want to be aware that these are the challenges you're going to face. Okay, and so just a brief about Option Tiger. Obviously we have courses. There are 47 courses that will take you from a beginner to an advanced level. I have now it's I think 500 videos on YouTube, and I'm also a top 30 Udemy, and I think many people must have come from Udemy to Option Tiger. And so this is things that I've learned over the years, and that's through trial and error. And the problem with trial and error is whenever you learn something, you probably lost money. That's just the way it works, is that this learning is expensive. And so over the years, I found out in the options world, regardless of what strategy you trade, through trial and error, I have come up with, you can call it sort of like a best practices set of methods. Okay, so for iron condors, there's the TraderMAX. Obviously, if you can do iron condors, then you can do credit spreads with the same methodology. Then an income max is a more simpler, but an income generating system using spreads as well as straddles. Day trade max and swing trade max are pattern-based, technical chart-based systems. Earnings max is something that you can do every quarter. It's a playbook of earnings trades. There's about 4 to 6 trades that you can generally do on a quarterly basis. And so, once again, all of these are, it's an approach, it's a method. There is nothing foolproof in the market. There's obviously no system is going to work 100%. That just doesn't happen. But these are, once you have a method, it's like and I'll get to the methods and everything. But once you have a method, you have at least a systematic approach towards the markets, and you have a strategic approach. No other instrument provides this. Only with options you can do this, and so that's powerful with options. It's very unique and it's very powerful. And we do want to take advantage of those features, because that's exactly what makes options so interesting from every other asset class there is. And so similarly, we have ETF max for more longer term trades and approaching sectors, currencies, and all of that. And then I feel adjust max is a key product, because you need to know adjustment techniques for every options trade. Okay, this is the key, because no trade is going to go boom immediately into in your favor and into a profit. But regardless of whatever the situation is, there is always an adjustment technique that is probably better than all the others out there. And at the same time, you want to be able to identify what that is. Not that obviously some little bit of analysis is required, and but at the same time, you know what to look for and how you do it. So Adjust Max, I think, is a very key product. But what brings it all together is TraderMAX, and so this is a live 4-week mentoring session. The next one is coming up in October 3rd. So we'll do, it's basically 9:30 a.m. to 4 p.m., which is market hours. And most of the time, the morning hours are key, whenever the market's open. So they, what do you call, all the overnight news from all the Asian and European markets. They get sort of digested into the US market, and so usually you'll see 9:30 to 11:30 is a key time, and then there's a lunch break, and we take breaks. So it's not like all through the day there's going to be talking or recording, but this thing is going to be recorded. And the last one was in April, and I think you may have seen some emails on that, and we'll talk about that later. But the last one was in April, and we did actually 24 out of 25 were winners, but not all of them were winners to begin with. So we'll talk about that as well. And then we'll have a Q&A, and I also want to show some ways how everybody, all our users can get involved in this process and get some compensation. So that's like a special thing that we'll get into. Okay, so so far, any questions? I'll just periodically take a break and just check in with everybody. Is there any? Everybody can hear me? Okay, yeah. Right. All right. Any questions? Just feel free to type it into the. I'll tell you. It's October 3rd, which is a Monday, Michael, and it will end in 4 weeks. So I believe it's October 28th. It'll end. So Monday through Friday, for 4 weeks. And if you can take a week off from your work, that would be great. But at the same time, you are, really the first 3 hours are key. First 2 or 3 hours. That if you can at least catch that. So say 9:30 to 11 or 9:30 to 12 noon, and if you can catch that, then that's even plenty. And if you can get a day or two here and there, we can do. The thing is, markets need to be active. Then only it makes sense to do all of this. But last time we did 25 trades, so that's a good variety of trades that's going to go in there. All right. So we'll deal with all of that. There'll be a Q&A. So let's move on for now, and we'll come back to that. All right. Do you look at fundamentals before maybe, or only technical? Okay. Good. Yeah. Good question. So we'll just keep typing in your questions, and once we run through this, we'll take up all the Q&A. All right. So first of all, and it's an open question. I want to keep this webinar interactive as possible. So does everybody know that in the options market, unlike the stock market, we are trading against these market makers? I mean, if anybody did not know this fact, no problem. Just put it in. If you did not know that your counterparty on pretty much 99% of the trade, in fact 100% of the trade, is going to be someone called a market maker and not another trader. Who did not know that? If anybody did not know that, just type it in. No issues. Okay. All right. Yeah. All right. Okay. I mean, no issues. Okay. So type it in, because these are some of the key things that you have to understand. Okay. In the stock market, if you think about it, on a trading platform, you pay a flat fee, right? A flat fee, $9 or $8 or whatever the fee is, and you trade like say 1,000 shares or 5,000 shares. Now on $9, how can these guys make money? That's because they don't take any risk. You don't deal with market makers in the stock market for most of the time. There are some very illiquid stocks, and the market makers are forced to jump in because they have a duty to provide liquidity, but that's very rare. Most of the time, the buyer and seller are matched by the platform, and stock changes hands, money changes hands, and that's it. And that's the reason why these brokers can give you a flat fee, because there's no risk there for them. All they're doing is the role of a middleman. Okay. So now, who are these market makers? Now we're talking again about the options market. Who are these market makers? They are obviously big institutions. So, like for example, you will see there are market makers for, and they all make markets in certain stocks, certain indices, things like that. So, all your guys, JP Morgan, Goldman Sachs is a market maker for, some things. There'll be other banks. There are smaller companies, Night Trading, Mercury Trading. I mean, there's tons and tons of market makers because there's thousands of stocks and there are indices and ETFs and everything. So you need market makers for everything, especially in the options. Now we're talking only about the options market. So the way these guys do business is, first of all, you have to have deep pockets because you're providing liquidity and all of that. But, you have to ask the question, why would these guys do it? Because when I buy an option, that means they are selling it. So they are directly involved in the trade, and their goal is to make money, and our goal is to make money. However, one of us is going to lose. There's no question on that particular trade, okay? So one of us is going to lose, and so why would these guys take thousands of trades from thousands of traders all day, and why would they be in this business of taking risk? Because every time they get into a trade, it's a risk because they don't know whether Google or anything is going to go up or down. But they don't have time. I mean, they literally, the order flow comes and they have seconds to either accept it or reject it. Okay, but there are some things going for them. It's the bid-ask spread. As you've seen, bid-ask spreads can be 1 cent like an apple. That's perfect. But if you're trading the SPX options, it can be as high as $1 or more than that. So they can set the bid-ask spread, and then if there is some news or something happens, they can set option prices based on the volatility that they see coming into the market. So they look at the demand for puts or calls, and they adjust the bid-ask prices. And first of all, they set the option prices itself. But have you ever, especially for the beginners and intermediate, have you closely noticed or watched the bid-ask spread going crazy? Like, for example, the FOMC announcement is a great, example of that, because as soon as the FOMC announcement comes out at 2 p.m., you can see the bid-ask spreads. If they were 30 cents or 40 cents, it can go as high as $3 and $4. Why do they do that? Because the market makers, they give themselves that buffer. It's a huge buffer. And if they see demand coming in, whether it's puts or calls, they will expand the bid-ask spread on that side. And, if trades happen, they're happening at that, a wide gap. Okay, so if people are buying, they're buying at the, ask, and if you're selling, you'll sell at the bid. So they have this kind of flexibility. They can set option prices. They can calculate, because all platforms calculate volatility for you. And so when things are not normally functioning, they have a lot of flexibility. So, you think they, analyze every trade? No, these guys are options experts. Okay, we are dealing with experts here on the other side. If you think about it as chess, it's like playing chess with Garry Kasparov or Anand Vishwanathan, the two world champions. I mean, might be a slightly bit of an exaggeration, but you get the point. These guys are experts. They have seconds to either accept it or reject it. Reject it means don't accept it. They trade by the numbers. They trade by looking at option Greeks, and they have lots of money. They have lots of cushion. So what does this business remind you of? It's exactly like a casino. Most of the casino games, you're playing against the casino, called the house, right? Except in the case of options or the market makers, it's much more lucrative. The casino is flashy, glamorous, and all of that, and you can see the money that they make. With market makers, you can't see that money, but rest assured, they're making money. In fact, if you look at the quarterly reports of all these Goldman Sachs and JP Morgan, these guys are on their proprietary trading businesses and the market making businesses. They're doing $100 million a day. That's the kind of profit that they make, okay? So why would they be in this business? Why would somebody run a casino? Why would somebody be a options market maker? That's because legally and regulatory wise, they are allowed to have a statistical edge. You know, if somebody did not have a statistical edge, why would they risk, you know, such huge amounts of money, have literally seconds to take a trade or not? And, you know, whatever, if I send in 1,000 contract position, the market maker's obligation is to fill it. Granted, they can, you know, set the bid and ask and all of that, but they have to fill it at the right price. So, you know, that's a lot of risk. So why would they take this risk? It's because they have an edge. And so when they set bid-ask prices, when they set, you know, they don't set the volatility. They calculate the volatility based on the order flow that they see. But there's a lot of flexibility here. So we as traders have to understand that the cards are not tilted to our side by definition. It's the same thing in casinos, right? You go there, and if you play long enough, that statistical edge will go to the casino, because that's just the math behind it. And that's just the structure of the industry, because if that was not the case, they would not be in that business. Okay, so the first thing we have to understand is we don't have the edge. So we have to, as traders, make a conscious effort in the options market to try and not just neutralize that edge that the market maker has, but we have to also bring the edge towards us. That is critical, that is key. And this is why, you know, and how do you do that? Okay, we'll talk about how do you do that, but you know, it's key, because if you just trading, you know, some trade and some strategy or some, you know, thing, in the long run, you're going to give it away. You're going to give it away. Statistically, it cannot work any other way. Okay, so this is the big piece that you have to understand, that the edge is not on our side. All right, let's move on. Let's now talk of some other human flaws. Okay, in the, you know, it's not just that we don't have an edge. We, as human beings, we have all these other issues that are also against us. All right, so one thing, especially with the options market, that you must you know, understand is that you don't know what you don't know, and what you don't know will hurt you. I should have added that part too. And what you don't know will hurt you, because there is a lot of moving parts to options. And you may be wondering, oh, how did I not make money on that? Or because there's volatility, there's time decay, there's, you know, there's credit spread, there's debit trade, there's all kinds of stuff going on. So the first thing you have to understand is, are you well equipped with, obviously not just the knowledge, but you know, in general, there are various things in the market that you have to look at. Are you well equipped for that? Because otherwise, then it just becomes a gamble. So some of the commonly faced, you know, flaws, human flaws that I'm calling it, and I'll be the first one to tell you, you know, being a human, you know, even I do a lot of these mistakes, and it is a battle. It is a battle within yourself, and you know, the most common one you'll see is, oh, my position is down, the stock went down, I had a call option, but now you know, you want to you're emotionally attached, you know, to that position and say, oh, it should come up tomorrow, right? Big mistake, right? I mean, whereas if you look at the market maker, your counterparty, is he thinking like that? No way. He's not thinking like that. At the end of the day, he wants to have a manageable delta exposure, a manageable theta exposure, and vega exposure. Okay, so they look at the Greeks, and not that you know, gamma is not important. I'm just saying, how much time decay do I have? How much, delta exposures do I have? How much, volatility exposure? So they make adjustments at the end of the day so that they go like, they have to be comfortable, okay? Whereas we will keep that call option open and say, oh, it should come to, tomorrow, things like that. So we make these mistakes and we get into trouble. The other thing is you're constantly fishing for opportunities. If somebody said, somebody gave a trade alert and, you did it. Now, I perfectly understand not all people have the time on a daily basis to, to do their own analysis and find opportunities. But that does not free you from your responsibility of knowing. Tomorrow, if I get a trade alert on Pfizer or anything, and if it says, hey, buy this, so and so, okay, why did he say buy that? Can you look up a quick chart? Can you understand why he might have made that thing? See, that you have to have that ability. And further down this slide, I say you must take ownership of this process, and that's what it is. If you simply depend on somebody else to feed you fish, it's not going to work very well. You need to own this process, okay? And when you're doing your analysis, you're not observing various parameters enough. This is a common mistake, especially at the beginner and intermediate level. You did not know that you had a very high negative gamma. What did that, and then suddenly you find yourself, boom, your position is in serious trouble. Oh, the stock only went down $3, but how is my position down so much? It's because you did not observe all the moving parameters that come with the options market. Okay, so that is a big mistake. You need to understand the Greeks. You need to understand your exposures and how much. Okay, 500 delta is not a whole lot for a stock like Facebook, which means if Facebook goes up $1, you'll make $1, or if it goes down $1, you'll lose $500. I mean, not that $500 is not a decent sum. That's not what I'm saying. But if you have $500 on Google, 500 delta on Google or Amazon, that is a big exposure because these stocks can move $10, $20, $30. And if it's going against you, you have a 500 delta, that's a significant loss. So you need to look out for these parameters and observe, what are these moving parts and how are they moving? Because one thing, as we all know, it is all mathematical. Nothing is happening because of someone's whim and fancy. No way. Options are mathematical to the core. So everything has an answer. And that's why they got Nobel Prizes and all. But although there are various moving parts, it is all coming from a formula. So, you've got to observe these parameters. Next one, I don't think I need to go through all of them. We'll just breeze through them. Not knowing what to do in fast-moving situations, okay? Okay, your stock is going down or whatever, your position is going down, you're seeing losses rack up, but you're frozen. You just don't know what to do. It happens. It happens when you're new to the options market, and it is very scary because, as you're frozen, you can see it's going down. What do you do? It's not funny. I don't mean to say it's funny. No, it's not. It's pretty serious, right? And then you take up some complex trade just because somebody told you, oh, you put this credit spread, or you got an email or something like that, and you take a complex trade without fully understanding it, and therefore you get into trouble. And this is a common one, we tend to take losses at the worst possible time. And what happens the next day? Oh, it did come back. But now you're like, you're just beating yourself up. Another common one, doubling down, tripling down, getting too big of a size, and that can get into trouble. Transaction costs can be a killer. We know that. I think everybody sees their transaction costs, and you can see you know, it is eating into your performance. It's eating into your performance provided you're winning. But if you're not winning, you are only adding to the problem. And this one is very important. You try to follow a system or a set of rules like a black box, or following a system without regard to what is going on in the market. These are big problems, and I see beginners and even intermediates, even advanced people, I'll tell you, oh, but the system said I should do this. Folks, there is no system that can, do the exact right thing, okay? All these systems, even my own things, all your max systems, they are approaches, they are methods, they are sophisticated techniques, they are tactics. What you're doing with all these systems is you're learning a certain tactic, a certain thing. Like I say, it's no different from chess or war. It's a moving target, and you're adjusting constantly, not options, but your strategy is being adjusted constantly based on what's happening in the market. So then, how do you win in this game? The way you win is you have to create your own arsenal of weapons and use it appropriately, use it wisely, use it in a timely manner. And if you're playing chess, or if you're if you think about one of the generals in our wars and everything, they have all these different tools and resources. It's all there ready. So if something happens, they use the appropriate resource to tackle the situation. Same thing with chess. When you start out a game of chess, even if you're a grandmaster, you might have some idea of what you want to do, but it's really the game that drives your strategy. And options are no different. The market is no different. So, but you got to have your set of arsenal. You got to have your weapons. If you don't have that, then you'll freeze. If the appropriate weapon doesn't come to you in a timely manner, you're going to freeze. You'll do the wrong thing. You'll take the loss because you don't know what to do, and therefore, at least stop the bleeding, get out of the position. That's what we'll do. Whereas, if these weapons come to you automatically, then that's when you are on top of the game. That's when you're on top of the game. Okay, so this is very important. This is very important. All these systems, everybody, and of course, I'm also, sort of positioning this properly, because over a period of time, I'm an options trader, but over a period of time, I've noticed customers make these mistakes. They say, oh, but you said if it goes up 10%, you should buy that call, or you should, do this. These are guidelines. These are methods. These are tactics. How you do it, when you do it, your decision-making skills, your risk management techniques, they're all given to you. Within this set of weapons, it is all there. But it ultimately depends on how you can use those weapons, and in a timely manner, in a most appropriate manner, things like that. So this is where, knowledge is one half of the game. Okay, knowledge is one half of the game. For any situation, things must come to you automatically. That's when you become an expert. Whether it's risk management or decision making is critical. Okay, when do you pull the trigger? When do you say, okay, enough is enough, I need to hedge this position, or I need to double down? There's nothing wrong with doubling down, don't get me wrong. But you continuously double down without any basis for the later double downs, that's a recipe for disaster. Similarly, so now when you talk about option strategies, every strategy has pluses and minuses, right? Whether you talk of credit spreads or straddles or strength, there is no free lunch. Every strategy has pluses and minuses. So what I've done in these max systems is come up with tactics and techniques where you can somewhat neutralized. In some cases, it gets neutralized perfectly, but in other cases, you might reduce the impact of the negatives and you exploit the positives of each strategy. So, basically then what you're doing is you're having a repeatable set of techniques that you can use. When you it, you'll probably use it only for that strategy. But, let's say I learned a technique on, I'll move ahead and explain. So let's say I learned a technique in the income max spreads. Does it mean that you can only use that technique when you're trading this particular spread? No, not at all. These are weapons that you're adding to your arsenal. There are weapons in every system. Does it mean that you only use it in that system? No, that's not the way to approach it. You gather these set of weapons, these set of techniques and tactics, and that all goes into your knowledge base in your head. And so by the time you get through all of these max systems, you're sort of now, you're looking like a general now. I forget whoever, is leading the thing now, but, previously it was Petraeus or whatever. Okay, so you're like the general. You've got all these things that you know, and you're running the show. So that's what these techniques are all about. But even with these techniques, are you done? Are you, basically, is that it? No, because there is a third element in options, which is that live trading element. You might have all these techniques in your mind. There is, things that are, we're talking like really soft skills here. When do you take the decision? How do you, if you think that you have a little exposure on one side, and you have your normal job, and so you cannot look at the markets all the time, what can you do? I mean, so decisions, risk management, trade management, adjustment techniques, so options is a combination of hard skills, which is the knowledge, and soft skills, which is emotions, decisions. These are all softer skills. So, TraderMAX was started because many customers said, hey, Hari, I know all this stuff, but I cannot win. What is going on? I just, I make mistakes. I don't do the right thing at the right time. Or I cannot decide what to do. Yes, I know, I have the knowledge of options, but it's just not working. So that's what it's all about. Okay, so that's the key element where you watch someone over the shoulder and, you do this for 4 weeks, and that's when this program, I advise that you don't follow don't trade what I'm trading. Look at how I'm analyzing and, the commentary over the days, what is a good opportunity? How do you decide it's a good opportunity? How do you decide that your original trade premise is no longer valid and you need to do something different? These are the kinds of things that can make or break. All right, so TraderMAX, we had the last one in April. I try to do this about two times a year or 3 times. It's a lot of work. That's why it's just recording all day. Well, the recording, I pause it every now and then when there's nothing going on and when we take lunch breaks and things like that. But regardless, it's a lot of work. So for April is available, and I'll talk about the April a little later. Once again, so it's the ultimate mentoring options mentor way. You just watch, you listen and you watch. That's it. Don't do anything. Don't trade what I'm trading. No way, because then your mind is somewhere else and you're not learning. We'll use the practical application of all the best options techniques, which is, from all these max systems. It's 4 weeks of live trading. We'll use, I might start a trade with a debit spread, but end up with a calendar trade within, 4 or 5 days. And why does it happen? Is it a good thing or a bad thing? Well, it happened because you're navigating this, a war zone, right? You're navigating. As and when information comes to you, the general is changing his mental attack or defense strategies. So trades will morph. It'll go from, like I said, a spread to a diagonal. It'll go from a long call to a straddle. It's possible. Anything is possible. You got to keep your mind open. Okay, so it's an audio, video. It's a webinar format. And while we say 9:30 to 4, there's no action many parts of the day, especially the middle, the lunch times. And so generally, the recording at the end of the day will be somewhere between 2 and 3 hours, because I pause. No, there's no point in creating a huge video file with nothing in it. So I pause it every time there's no action, and at the end of the day, this recording will go out to people who could not attend the session that day. But basically, what we are doing is we are bringing the entire arsenal of tactics. Even after going through all of this, it's difficult to be a good winner, consistent winner. See, consistency is important, right? You can, one trade, you might, kick the market makers behind, but can you do it on every trade? Can you do it consistently, 4 out of 5, 3 out of 5? So all of these, it's very hard. And so we have to come up with the best game. That's the only way to beat the market maker. And your tactics must be top of mind, meaning you're not thinking, oh, should I do this or should I do that? Or what about that? Or how about, I'm just frozen. I can't do anything. It's got to be, as you see a situation developing, these things must be top of mind. And that is really where you become the expert. So it's like the Terminator. If you remember Arnold Schwarzenegger, he comes down from somewhere and drops into that bar. He's scanning everything, sets of data, and immediately he's processing it. That's how we have to be. That's how the market makers are. When they see a trade come in, they're not saying, oh, it's a call. I don't know if Google's going to go up, or they don't care. Because they're like the Terminator. They're just scanning the data and say, okay, does it fit my parameters? Boom. That's it. All right. So we've got to, as much as possible, get into that kind of a non-emotional, non-attached mode. And that's the key. And so those are soft skills, those are not, you won't get it. You can't study a course for that. You just have to do it or see somebody doing it, and that's when you learn. And even for me, it's not that, if something is happening that I know the answer right away, but I know the 2 or 3 options or alternatives that will work out for this particular situation. And so I go into an analysis mode, or spend a couple of minutes on one of those alternatives, spend a couple of minutes on another, and determine which one is better and which one is will work out for us. That's what it's all about. So the tactics must be top of mind. You need to scan the data, put the tactics into the analytical process, and you come up with a solution. So that's really how you become an expert. So with this, what you get is, regardless of, taking a water break, which strategy you choose, you're going to get superior options trading knowledge. Okay? Because my approach is, I teach you to fish, not feed you fish. These tactics can be used in any trades. Just because you learned something in, let's say swing TraderMAX, it doesn't mean you cannot. The whole point is, from each of these systems, you're going to get 3, 4, 5 weapons. And you've got to keep these weapons available and use it at the appropriate time. This is how you can create a consistent performance for both short and long terms if you take a systematic approach to a trade. Otherwise, it's difficult to win, I'll tell you that. And why do you think I came up with all these? Because I was frustrated. I couldn't sleep. Like, okay, I know iron condors very well, but why am I getting, crashing and burning on this? So I had to come up with something that will, take away the negatives, or at least neutralize it to some extent, and exploit the positives. That's exactly what it is. And so TraderMAX comes with about 2 or 3 weapons, critical weapons. TraderMAX is easily the most sophisticated max out there, but they all are. They all have anywhere from 3 to 5 weapons each. And so once you go through all the max system, you're coming up with, you have all these tactics in top of mind. Now it's just a case of deciding which one is appropriate in this particular situation. Okay, so that's what it's all about. Now, I'm redoing my website. Previously it was fixed price. Now we have a fixed and a monthly plan. It's still a work in progress. So, but let me just briefly show you what I'm talking about. So yeah, here, just redoing it to some extent, I suppose. Then there are the advanced max systems. Okay, so in options you have the, you have the education first. Without the education, you can't do it. So this is a necessity. But is it sufficient? No, because you need techniques and advanced, sophisticated approaches that you can deploy at your free will, depending on what the particular situation is. So here, fixed price model, and all these are going to change. And then there is the silver, gold, platinum, all of that. Once this thing gets somewhat developed fully, which will be just another couple of days, I will send you guys an email. But basically, the new one is the subscription plan. So the silver is just the courses. So we're talking about the 47 courses. You'll get 4 courses per month. The gold is only the max systems. You'll get 1 max per month. Platinum just combines the two in a cost-effective manner. It's just a combo. So you get 1 max per month and 5 courses per month. Okay, it's simple. There's nothing really to it. But my point is, I actually want to sort of even re-engineer the whole price. I want to make it more attractive and spread the options knowledge, and even between our users, which is you all, I want to be able to have you guys also participate in this, so we can do this, and it will obviously be of monetary benefit to you. Otherwise, why would you do it? So let's go back to the presentation. And I think, okay, let me just briefly talk about this. You may have gotten an email from me where, yeah, I'm selling the courseware bundles. I think it was $149.99, I don't know. But whatever that email says, I want to reduce the prices so we can expand the reach for this quality options education. Now, when I first came out with all of these things, I was wondering, oh, would people like it or not like it? And just based on the past 4 or 5 years of feedback, I think we can all agree that it is top-notch. It's absolutely top-notch. And so even on Udemy, I have, my average over 1,500 reviews and 22 courses or something is 4.55. That's phenomenal. And I think it's there for everybody to see. So, this is top-notch material. And I get emails like this, every day. That the material is just fantastic. So it's great. So look at it this way. Even if you buy all of these things, what your investment is like about 3,000, 4,000, something like that. You can lose that in one trade. You can lose that in one trade. Of course, depends how big the account is, but generally I'm saying losing 4,000 is so easy. Very easy. Whereas if you invest in this, now then you're taking ownership of the thing. If it's not good stuff, I won't say it. I know my competition. Whether it's Dan Sheridan or John Carter, they're very good traders and they've been on the floor and of the CBO. All that is different. But if they're just teaching, you will find that mine is actually top notch. And I don't mean to say that just because it's mine, and I'm not saying it. The users are saying it. The customers, you guys are saying it. That is the best you've seen. All right, so anyway, let me move on. The deal is, this usually the TraderMAX, just the TraderMAX goes for $19.99. Want to give a deal over here. TraderMAX plus four other Max systems, plus the April recordings. Okay, so here the April recordings is where you'll see the 25 trades and with 24 winners. But out of those 24 winners, at least 8 to 10 started out losing. So they were losing trades. So how do you turn them around? And that's really key. In options, if you simply close out your losers, then you're not fighting the right battle. You've got to be able to bring your losers to a much smaller loss, or better, break even, or even better, a slight profit. You've got to aim for that. You cannot just close your losers and walk away. That will never get you long-term consistency, performance. So you'll see that at least 8 to 10 trades get into trouble in that thing. And if you're going to attend the October, I would highly recommend that you, watch these recordings. It will give you a flavor of what to come. Now, it doesn't mean that, October will have 24 out of 25. No way. I mean, we can't say all that. But the point is, how are you reacting to what is going on in the market with your positions? And even if you're a part-time trader with another job, you're a full-time trader, whatever it is, you've got to have this knowledge. You've got to have this arsenal, okay? So anyway, so my PayPal email is hswami. If you guys want a subscription model, you can go to the website and look at it. But these are the deal prices. I think I've put it all accurately. I'm just not sure about one or two things here. But regardless, whatever, if the email says something else, then I will honor that. Don't worry about it. All right. So it's a good opportunity, I think, especially for people that are, getting in from the beginner or intermediate. The 4 weeks will totally leapfrog. I mean, that 4 weeks literally is like 1 to 2 years of your own, doing things on your own, making mistakes, learning. Of course, you'll learn, but mistakes are expensive. Whereas this thing can leapfrog that by about 1 year minimum, 2 years perhaps. Okay, so it's a very good program. Now, what I also wanted to talk about is how you can join in. This is something new that I'm thinking about, right? So, if you do believe that the content is great, then, why don't you help me in creating sales? And it's not like you have to push it or you're being a salesman or something. There's nothing there. Let me show you what I mean. So, let me show you what I mean. So here, if you go to the dashboard and I say users, right? So here, and I can add, this is my back end, okay? And so this month they've been having some payment problems, I think. So I've been, routing it to my, that's why I'm routing it to my PayPal account directly, the payments. These people they're changing some rules or something like that, and I'm not particularly happy with it. So, but the system is great. So in the back end, I can say who's an affiliate, all right? All right, there you go. There are few affiliates here, but I've not, promoted the affiliate program in a very big way. But when you become an affiliate, you will get an affiliate code, okay? And it's not like you're trying to sell. You shouldn't sell at all, because the content should sell itself, okay? So basically, in a very simple way, and I'm going to have a webinar just focused on this for next week, okay? But I just want to give you, and it's not prepared yet, and therefore, obviously, I can't, show you anything, because this I've just been thinking in the last couple of days, and this whole webinar itself, I thought this morning only. So what I mean is this. So if you go to optiontiger.com, let's say there's a blog post, right? And okay, so volatile markets, this is my blog. So if you click on this, you'll get a link, blog.optiontiger.com/volatile markets trade, okay? And so all you'll need to do is, for example, I forget what is the code they, what they use. I think it's called AF code. So question mark AF code equals, let's say your ID is 15678. That's it. You just have to add that. And the system processes it. Okay? The system processes it. And once you take this, you put this here, and let's say you go to Facebook, right? So what are you doing? You're just spreading a nice article that you think, deserves to be read by other people. That's all you're doing. So if you go here and if you see this, so what's on your mind, right? You just say, hey, check this out, guys. Cool article. So if you do, now if I hit enter, it's going to post it. So, what did I do? Damn. Oh, there, it picked it up, right? It picked it up. Even though you added this little bit in the behind, anything question mark, this is of course HTML, which you don't have to worry about, but this is how, all your affiliate systems and redirects and everything work. This is how online advertising gets tracked. So you do this. Now, if somebody clicks this and say, oh, really cool article, okay, let me, and what are you doing? You're not selling. You're just sharing information. You can do the same thing to, say, YouTube videos on my channel, for example. No, my channel. So, create. Damn, this is not the computer I normally use. I think you get the idea, but let's see. Okay, so my channel is here. I've got 2,230 subscribers. If you see a video here, let's go here, right? So this is a video, and I'm giving some thing. What can you do here on any link? You can do the same thing. Question mark, AF code, or whatever it is. I don't know the actual syntax of what you put there, but once you open an affiliate account, you can see that. And so this is what you want to copy, because that affiliate code is what tells the system that, hey, this is Mike's referral, or this is Lisa's referral, whoever's it is. The system tracks that. And then when somebody buys, and they promise to fix their payment system by this month end, so don't start sharing before that, because I need them to fix that before it's not a problem. I think they've definitely promising to fix it. But you take this link now with your code, and once again, if you go to Facebook, now I don't want to post this. Okay. Delete. Instead of this, now I want to post this. There's the video. And if somebody watches it, you've just propagated your affiliate code there. And not only that, once you do that, that person, because of the cookies, that person will always be your referral. Okay? That's important to understand. They will always be your referral. Even if they come back to the site after 3 months, they are still tracked. Unless the only way it won't come over to your account, or rather, you won't be credited, is if for some reason their computer crashed, or they had to wipe out all their cookies, things like that. But if they open an account, so let's say, let me cancel out on this, and let's say they came to the site and they said, oh wow, this is cool. Let me open an account. So let me go to home first. They'll be like, okay, I'm logged in. Okay, so they'll be like, oh, all right, that's cool. Let me put my name. Harry, and my email, blah, blah, blah. Once they register, that person is tracked to you, okay? Now, regardless, their cookies and all might be, completely, wiped out. It doesn't matter. So the key is, they should open an account. That way, that is permanent. The only time you may not get credit is if they click on the link, they come here, they don't open an account, they go back, and for some reason, their cookies got cleaned up. Okay, so it's a fairly simple thing. This is how online marketing and tracking and advertising, all of that works under this principle. HTML browsers are known to look for this question mark and whatever you want to put there. So anyway, that's just a little thing, interesting. I think it's a win-win for both sides, you guys and me. And you get 30% of the sale. Okay, every sale is 30%. So that is, and if you have access to large groups, let's say you're the president of some association with 10,000 members, and if you don't mind sending an email with your affiliate link to this thing, and the good thing is, if you see this Facebook and all, now here you can take this out, right? Because you don't want to post a link which has all this nonsense here. So you would just replace that with, hey, check this out. That's it. Okay, so they don't even know you're doing a promotion. They don't know. If I posted this now and anybody that clicked it from my friends group or whatever, they don't know that this is an affiliate link. They don't know that I'm getting credit for this. Okay, so it's all behind the scenes, very much behind the scenes. It's pretty sophisticated, actually. I'm just giving you a very high level breakdown on how this entire online marketing works. Okay, so I think my goal for Option Tiger is to build out an army of affiliates. And the good thing with this kind of stuff is you are not selling anything. You're not selling. Nobody's asking you, hey, buy this or this, that. No, you're just going to put a 1-line, 2-line comment and say, hey, this is check out this video on trading, or check out this video on technical analysis, or whatever, good stuff. Okay, and if you have some special, like I said, if you're the president of an association that has 5,000 members and you want to promote it to them, then we talk offline and we come up with a very special deal. So from your side, you're going to have to think about how you can open your mind. And here, all right, I'll tell you right now, one of the best places to post these kinds of things is LinkedIn. Okay, because all professionals all have basically this. The people on LinkedIn are the ones that invest in the stock market. And for obvious reasons, they're all professionals, and they do that. But you can do the same thing on LinkedIn, right? You put in your status. This, you won't believe how, because in LinkedIn you get 3 levels of your network is 3 levels. So a lot of people can see that on LinkedIn, and it actually can be a very lucrative thing. It will take some time, no doubt. It will take 3 to 6 months for you to get the hang of it and do it. But once you start seeing results coming, it becomes an exponential thing, because once somebody is your referral, they're your referral for life. Anything that person does is you'll get 30%. Okay. Anyway, so that's a little bit of sales stuff there. So, all right, questions. Okay, Eli. What's the probability that you won't get assigned? Even 0. You will get assigned. Okay, the question is, what's the probability that you won't get assigned even if your option expired? Obviously, you've sold it, right? If you bought it, you don't have an obligation. You have the right. But if you're a seller, that's when you'll get a call from your broker. Okay, if you're sold, if your short option is in the money that Friday or Thursday when the option is expiring, your broker is going to be getting a hold of you from 1 o'clock onwards. And if they cannot reach you, they'll close your position for a huge loss. Remember, if your option is in the money, it's going to have not only intrinsic value, but it's going to also have extrinsic value provided it's somewhat close to the money. If it's not close to the money, then you're already looking at a huge loss then. If it's somewhat close to the money, there's extrinsic value too. So don't let your options go, sold options, short options. Don't let your short options go in the money, okay? That is the first advice I can give you. If you talk of index options, SPX, NDX, RUT, Russell, those don't have assignment. They are cash settled. Unfortunately, they are huge indices. NDX index is like huge. It's the NASDAQ 100 index. So not everybody can trade that. I frankly only trade the SPX and the Russell and the NASDAQ. I don't trade the stocks. Very rarely I do trade stocks. I have a set basket, 8 stocks. I know how they trade. I know how much they move in a particular day. I know how much volatility they have. And I know generally how much those options cost. So you need to know the DNA of these stocks. I mean, that's just my view, okay? You're obviously free to have your own philosophy. I see, on all these platforms, even Thinkorswim, they have the scanner. You can put a scan there and say, hey, today, give me the most active, whose volatility is more than 50% of its normal historical volatility. You can do all those things and filter out stocks. I don't do it. I mean, I prefer to know the DNA of my stocks very well. Okay, so that's a personal thing, obviously. I'm not saying I'm right. If you want to follow, if you want to just look for movers of the day, by all means, go right ahead, okay? I am not right and you're not wrong. It's not that. It's just a personal, like I don't have more than 2 or 3 positions at any given time, because I find that my mind gets distracted if I have more than that. So I would much rather, if I see a good opportunity on the 4th stock, I would much rather close out one position, even though it may have a chance for much bigger profit down the road. It already has a profit, maybe 5%, 10%. But if I kept it for another few days, maybe it has more. But the new opportunity that I'm seeing has even more. So then I'll close out this and open that. So these are all things that you have to decide for yourself. What is your comfort? I mean, see, if anything that makes your stomach uneasy, if anything that makes you uncomfortable, do not do it. That is the classic. When a position is going bad and you're getting that feeling in your stomach, it's time to do something, okay? Don't even let it get to that point. So there's a lot of soft skills involved here. I mean, I think, most of you probably understand what I'm saying, but what I want to impress upon you is that it is these soft skills that will make or break your performance. The hard skills is just knowledge. You got it, okay? You got to put in your effort and you know it. It's the softer skills that will decide your performance, basically. So with options, there's a lot of this soft stuff. And that's why I think the TraderMAX program, see, to be honest, when I started trading, in the mid 2000s and 2006, 7 and all, if something like this was there, I would have joined it, because I've lost a lot of money when I first started. And I had to climb out of the hole slowly and steadily, and that was the hardest part, to climb out of that hole. Okay, all right, questions? Right, for beginners, I have heard you are not allowed to trade. Yeah, so okay, let me read out the question fully. For Hari, for beginners, I've heard you're not allowed to trade sophisticated spreads and the like. Typically, how do beginners start? I.e., build to be able to trade more advanced strategies. Folks, please use paper money, okay? If you learn something, okay, now you've gone from single options to option Greeks, watch the Greeks, guys. You've got to watch the Greeks. These Greeks tell you everything about your position. You've got to watch the Greeks. Then, let's say you just learned about a bull call spread, right? Put it into paper money, put it on. Put a trade. You sell a bull, you buy a bull call, and then you sell a bear call too. Try everything on paper money. Not just try. I want you to try and take it seriously. Just because it's not your real money, it doesn't, you got to fight for those trades, okay? And don't put a trade that you don't understand yet. So, you need to go through the material. If you're talking about Option Tiger, we have the courses, right? So you got to go through the material and you think you've got it, 40%, 50%, 60%, fine. Now you put the trade on, observe it. When it's time, suddenly the losses are racking up, you need to do something to that trade. Don't just close it just because it's not real money. You got to fight for it on paper money. Use paper money. That's how you move up, Reed. Okay? I hope that answered you, but typically that's how beginners start. And don't make the mistake of getting yourself more privileges than your knowledge and your expertise would justify. Okay, I hope I made that clear. So don't just say, oh, I've had 3 years of options experience just so that they can give you permissions for the spreads and other condors. Now, don't do that. All right, just be honest with yourself. And besides, if you do that, that is disaster. Okay, that is exactly what I meant by don't trade something that you don't understand. Perfect, perfect. All right, next question. Tony, I hear some option gurus say that paper. Yeah, I agree, Tony. It's all how you look at it, right? See, because your emotions are not involved, right? Yeah, exactly. Okay, let me read the full question. It's a great question. I totally agree, by the way. I hear some option gurus say that paper trading isn't all that helpful because you don't learn as much when you have no money on the line. Thoughts? Excellent question, right? If it's not your real money, would you really have 100% of your heart into it? Hey, my answer is, it's up to you. If you want only 40% of your heart in there, then that's what it is. But if you want to learn, think about it as, a college homework exercise. You want to do it perfectly, You want to crack it. So if you look at it from that angle, you fight for those trades. You observe the Greek. See, observation is the key thing, okay? You have to observe what is happening, whether it's on the risk graph, whether it's your Greeks, the gammas, Vegas. Why is it moving that high? What is the explanation for my theta suddenly jumping or not jumping or whatever? You've got to be curious. And you've got to go in and find the explanation because the explanation is there in the numbers. Everything is mathematical in options. So the explanation, the answer is there. You just have to find it. And you've got to be curious enough to go find that answer. All right? I see people really absolutely the human side of the trading, controlling. Jack saying here, the human side of learning to trade and controlling your emotions is 90% of being successful, okay? I was being modest and said 50%. He's saying 90%. I don't disagree with him. There's a lot of truth to that. I see people really stress IV, rank, and stuff like that, but they just trade volatility. It's like they don't care which stock or the direction, they're simply bearish on it. Yeah, it's an advanced strategy, right? Okay? That is advanced stuff. If you're simply trading based on volatility, you can do that. I'll tell you, even for beginners, you can do, well, not beginners, maybe intermediate, is the earnings trades. Because I don't know if you've seen, well, the advanced people definitely have, probably intermediate also. So earnings, like what's it? Netflix, for example, great example, right? Netflix. It goes from a volatility of 40% to 120%. Okay, then you're playing that vol crash. But how do you play it? You're obviously going to have a negative Vega position. You're going to have perhaps a negative gamma position as well, because negative gamma and negative Vega sort of go hand in hand. But the problem with negative gamma and negative Vega is that if the move is a lot more than what is expected, then you're going to get screwed, okay? So there's obviously pluses, there's obviously minuses, and you've got to match the pluses with the minuses, and blah blah blah. You got to do that, all right? Okay, Gio, will you be trading? I did paper money. I did. I did the real money. I did the paper money. One of the things that I think everybody, when I say everybody, it's the regulatory environment, is that people don't. Rather, if you're not licensed, see, I'm an educator. I'm not a financial advisor, right? So, the whole thing is education. So I do, because to stay clear of the regulators, I do it on paper money now. I used to do it on real money, okay, last year and all. And then somebody, there's been a lot of developments in this area. So, that's how I did that. All right. Yep, Tony, welcome. Earnings, exactly, Eli. Right. But overall, should I trade a direction on a chart or sell when vol? No, Eli, you're jumping way ahead, okay? You're jumping way ahead. You cannot, there is no answer to these kind of broad questions. But overall, should I trade a direction on it? It depends. What stock are you talking about? Where is the technical analysis there? What is, especially if you're trading earnings, what is expected? You can't make, or you can't expect one size fits all. This is exactly the whole point of this webinar. You have to keep your mind open. You have to view every trade, every stock in the context of the overall environment, in the context of its own company environment, in the context of technical analysis, in the context of sentiment, in the context of volatility. You've got to look at everything, man. There's absolutely no other way. Okay, and that's why I prefer to use my 8 to 10 stocks, because I know, okay, Google was, volatility was 25% 2 days ago. Now why is it suddenly 33? There must be a reason for that. Okay, so I prefer to keep my basket very small because of exactly these kind of things. I mean, who can track 4,000 stocks? I mean, there are, I believe, 3,000 stocks that have options. I don't want to track them. I just want to track my 8 or 10. Netflix, Google, Apple, Priceline, Tesla, a couple of others. That's it. I don't trade anything else. Gio says, tell Tony to have a look at, not Tony, it's actually Eli. You should look at earnings max, okay? Here, Gio is saying this because he obviously has it. Not Tony's question was not earnings, I think. No, it's Eli. So Eli, look at the earnings max. It's fantastic. Gio, would you say that earnings max gave you about 3 to 4 weapons, right? I mean, that's what the goal is from all my max systems, to get particular insight about a particular situation or a group of situations, and you create a weapon for that. Okay. So anyway, all right, folks. I hope you enjoyed the evening. I'll let you get back to your families or whatever you're doing. Fall is a good time in the markets. I would say that in general, but like I said, the summer's gone against the trend. So, okay, I think I missed one or two. Hold on. To be successful, what does an option need to know about current macroeconomic environment and market conditions, and how can you find out about these things? Harold, have you seen this? There is this this macro and finance bundle. Do you have that? I mean, your name is familiar to the point. I know you have a lot of my systems, but I don't know if you have this one. Okay, that's what you need. Okay, in this one, there are 4 courses. Okay, bond markets, global money, macroeconomics, U.S. stock markets, ETF, India. Yeah, this is what you need. These are killer courses. There's 4 courses here. Okay, so get this one. This is what you need. So it's an advanced introduction to financial markets, macro, global finance, bond markets. How does interest, today, what is the one tune that the markets are dancing to? It's the stupid interest rates. So, so whether we agree with it or whether we like it or not, we have to bloody follow it. And every time Janet Yellen comes on TV, it's a nightmare in the markets. I mean, it's good and bad, but I'm just so, I find it incredible that global markets are dancing to this one tune. It's just amazing to me. Anyway, all right, folks, have a great night. If you still have any questions, info@OptionTiger, always there. Take a look at all these things, see where you are, see what you need. With this particular, let me just go back and point one thing that I forgot, I think. With this particular package, the TraderMAX plus 4MAX, the 4MAX that I would recommend are definitely Condor Max, Adjust Max, Weekly Max, and I would say either Income Max or Swing Trade. Of course, is much, 3 to 4 weeks. Day traders, may not be for everybody. You've got to have time for day trading, so you can forget about that. Earnings is very specific, so unless you're interested in earnings, you don't take that. So, but Condor, Adjust, Weekly, these are extremely important. This is where the bulk of the Option Tiger intellectual property lies. Okay, in these 3 systems: Condor Max. I'm sorry. Okay, Condor, Adjust, and Weekly, and earnings also. But earnings is a separate thing. Whereas if you look at, Income Max is not bad actually, because you get, there's two or three things there. Income Max, debit spreads, credit spreads, straddles, strangles, all of that. So those 4 would be my recommendation. But it's up to you. If you want one of the other ones, that's fine. But basically, I'm throwing in TraderMAX plus 4MAX systems plus the April recordings for $2,999. If you have any questions, please do let me know. Just Condor is the best. I told you that's the Eli, it's here. Earnings Max here. It's all $199 each. Okay. I mean, this is the sale price right now. I'm having a Labor Day sale, and I forgot to mention the date and all. It's open till next Monday. Okay, because Labor Day. It's basically a Labor Day sale, and it's very simple. You just add up whatever you want, and go to PayPal, and this is my email. hswami@gmail.com. All right, so I will send out the recording for this, and I will, so that you'll have access to all this information and the slides and all of that. Okay. Any questions? Send us an email. If you have my assistant Carol's email too, please include that, because sometimes she works from Philippines, so when it's nighttime here, you can get the response from there. So it's a 24-hour sort of working window for us. Great. All right, Brian, all the best. And any questions, send me an email and we'll take it from there. Have a great week, guys. Take care.